Hey everybody, welcome back to the channel. Today I'm in the search for a dividend ETF that can serve as a good core holding that has a decent dividend yield, quality holdings, and an affordable per share price that people would be comfortable buying. Some of these big dividend ETFs like from Vanguard, they have $100, $150 price tags per share. Sometimes even $80, $70, $80 it feels expensive, even though theoretically share price really doesn't matter in an ETF so much. But as a beginner or someone with a smaller amount of money to work with, the lower price shares of an ETF can make you feel better, like you're making more inroads. And that's a good thing, I think, to be able to feel like, okay, I own, 2 shares. I'm able to buy 2 shares of this, not just, I put $25 in and I got 0.02 shares of whatever. You know what I mean? It's psychological, but it's real. And so if you're new to the channel, please consider subscribing below. Leave me a comment also. I'd love to know all the new people that we have along. Having great conversations with you guys down in the comments section, so I appreciate it. And let's get started. So what are we looking at today? Well, it's an ETF from Fidelity, and the ticker symbol is FDRR. There's an interesting one because it's called Fidelity Dividend ETF for rising rates. Now, this doesn't follow a popular index. Fidelity is a huge company, and a lot of times what Fidelity does, instead of following an index, see what people don't understand, there's indexes that are made by the S&P 500, the Dow, things of that nature. ETF issuers have to pay the S&P company a royalty or a fee to be able to have access to track that index. So what Fidelity does with a lot of their stuff is they make their own. They say, you know what? Forget your fee, we'll just make our own. And that's a lot of Fidelity funds are like that. They have some free index funds that track large cap companies that's very, very similar to the S&P 500, but they can't brand it as a S&P 500 tracking index fund because they don't want to pay the fees. So Fidelity just constructed their own and made it fee free for consumers. Just a fun little fact there. So what is the Fidelity Dividend ETF for rising rates? Well, it right here, they invest in large and mid-cap dividend-paying companies that are expected to continue to pay and grow their dividends and have a positive correlation of returns to increasing 10-year U.S. Treasury yields. That seems a little odd, but we've kind of hit a bottom, I think, in the 10-year Treasury yield, because recently it was down in the 0.5% or something like that. I don't think, now of course I'm not a financial advisor, and I'm not a finance professional. I don't see the 10-year Treasury yield going much further down, so this could be a positive. So what does FDRR invest in? Let's take a look. 91% is in North America, 5% in Europe, and almost 2% in Asia. 91% in the United States, and then a little bit of international. Their top 10 holds 30% of the entire fund, and that top 10 is Microsoft at just under 7%, Apple at under 7%, Johnson & Johnson just under 3%, United Health at 2.5%, AbbVie at 2%, Pfizer at 2%, Gilead Sciences around 2%, Amgen around 2%, Intel Corp around 2%, and Procter & Gamble around 2%. So very strong, healthy companies in this top 10. I like it. So we'll look at the sector exposure real quick. 28% in information technology, 16% in healthcare. You saw a lot of healthcare in their top 10 there. 11% in financials, 10% in communications, 8% in industrial, 7% in consumer staples, 6% in consumer discretionary, 3.5% in real estate, almost 3.5% in utilities, 3% energy, 2.5% in materials roughly. It has 86% of their holdings are large cap companies, 8% in mid cap, just under 4% in small cap, and they are considered a large cap value ETF. So what's the dividend and expense ratio look like? Let's look at the expense ratio real quick. First of all, it has $287 million in assets under management, has an expense ratio of 0.29%, and a yield of 3.6%. That's not bad. That is not bad for the quality of companies that you have in there, especially in that top 10. So let's look at the dividends section here and look at the growth. I forgot to mention, this has only been around since, close to the end of 2016, about September of 2016. So let's look at dividend growth. Has a 11% 1-year growth rate. And it doesn't show what the 3-year is. I don't know why, because it has grown, but it pays its dividend quarterly, and it looks like it's been raising. Had a little dip there at the end of December, but for the most part, it's been raising. And if we compare this to SPHD, because SPHD seems to be the go-to for every beginning dividend investor there is. Let's look at dividends there. We've got a 5.4% dividend yield in SPHD, but the 1-year growth rate is a little lacking there. I'd like to see what the 5-year growth rate is coming up for FDRR before passing judgment there. But one thing, if you want to look at it, total return, if we look at the FDRR compared to the SPHD, and we look at year to date, so the FDRR has dipped 11.3% year to date, whereas SPHD 21% year to date. That's a big number. That's a pretty big number, especially for SPHD that is supposed to be low volatility. It really shouldn't have did that as bad as it did. You got did I just change that? Oh, I'm on it. That's what it is. So a 1-year return for FDRR down 3.13%, and SPHD 1-year return down 19.34%. Now, if we want to look at it, if we invested $10,000, now this is only going to go back till, like I said, September of 2016, and we'll compare $10,000 invested into SPHD and $10,000 invested in FDRR, and we'll see what it looks like. I already got FDRR in here. Chart 10,000 invested in FDRR, and what you will see is FDRR from September 15th, 2016 up until end date of June 18th, 2020 had a total return of 39%, whereas SPHD had a total return this is with dividends reinvested, of 4.52%. That's big numbers. So average annual total return for FDRR is 9.16%. Average annual total return since 2016 for SPHD is 1.18%. Those are big numbers, guys. So that is FDRR. You know, after looking at it, comparing it to SPHD, I think this is a good core holding. The knock on SPHD is they don't really screen for quality. They only screen for the high dividend and supposedly low volatility. With FDRR, you at least get some quality holdings. You know, I mean, big time. Microsoft, Apple, Johnson & Johnson. You can't beat that. You know, and another thing is diversification. If you're going to hold an ETF, you know, I think 50 holdings like SPHD has is a little too small as a core holding. You can have SPHD as a, you know, 5-10% of your portfolio, but if you're going to have a core holding, you know, you're going to put a lot of money into this ETF, I would like to see, you know, at least 100 holdings, and FDRR comes through with 117. So it's diversified. It has a, you know, good share price. Right now it's at $31.28 a share. So beginning investors that, you know, have $100 a paycheck, you know, they can buy 3 shares and feel like they're doing something, and you know, get them going with a good basket of holdings, a decent dividend yield at 3.6%, and get you on your way to successful investing. So that's all I got for you guys. If you have any questions, leave them down below. Have you heard of FDRR? Are you invested in it? Would you consider it? Leave me a comment down below. Thanks, guys. You guys have a great day, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.